There's known risks and known things that can take over this market, but there's also unknowns, and we want to have that all-terrain type of strategy, have the right positioning, have the right tactical strategy for managing through that and navigating through that, so that you know that you've got the portfolio that, regardless of what happens out there, you're going to be okay. You're going to be taken care of. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. We're back. It's Friday. Another good week in the markets. How you doing today, Greg? What's going on? What's happening this Friday?
Yeah, no complaints. Weather's looking good. I guess a little piece of exciting news, if you're a Canadian soccer fan, they're announcing the roster for the World Cup, which in and of itself might not be that exciting, but it's just more of a reminder. World Cup's coming to Canada in 2 weeks, coming to Toronto, coming to North America. So if you're a sports fan in general, I think it's a pretty exciting time.
Is it really? I didn't realize it was coming that
2 weeks
soon. That's news to me. What's the first? You got tickets, or what's the first match?
I don't have tickets, but the first game is in 2 weeks, 3:00, BMO Field. So it should be good.
That's awesome. That's exciting stuff. No, yeah, you're a big soccer fan, I know, which is cool. You might have to switch gears. It doesn't look like the hockey's going too well at this point for the Canadians.
Canada can just switch their support from the Montreal Canadiens to the men's soccer team. So
you got to keep moving along. But no, it's good. But yeah, look, we wanted to give the last couple weeks. We've given some more high-level overviews on markets and talking about just the technology themes and commodity themes and where we're at in the market cycle. And I think this week what we want to try to do is tie that back and kind of what that looks like right now in markets, what that means for portfolios, what that means for positioning, and just kind of talk a little bit from a bigger picture on what's going on out there, because it seemed a little bit like a confusing time where markets just seem to keep going up and up and up, which is great. There also seems to still be a lot of just unknowns and uncertainty and confusion out there, and I think it's one of these things that you get as markets push on more and more, and you get later in market cycles as things start to seem even more confusing. So it seems to be a little bit, that's where we are right now. But we wanted to try to just make sense of markets, make sense of what's going on out there, relate that back to our portfolio, our positioning, our strategy, and just unpack things from a high level that way.
Yeah, and maybe before we get in, Will, if you can just kind of summarize what we've seen this year in the markets, because to your point, the markets have been so strong, which has obviously been great to see, but there's so many kind of undercurrent events that are going on. You got geopolitics, interest rates, just general economic stuff going on. So what are you seeing, and can you summarize it all?
Yeah, I mean, look, this goes back. I mean, I think we have to look back even a few years that markets have been going up. Like, there's been corrections and crashes and resets, but markets still largely have been unchecked since 2022 was the last real economic slowdown or economic turnover that we saw in more major market event where you actually had a bad year in the markets in 2022. But we're now at probably about 3.5 years that markets have been going largely unchecked. And yes, we had the tariff crash in April of last year. We had the war in Iran, which was March of this year. So we've had a couple corrections and sort of 10, 20% pullbacks in markets, but nothing as extreme or systemic as what you got in basically COVID and the fallout from COVID in 2022. So it's been a pretty nice run where markets have gone up, and what you saw is 2023 was a positive year, 24, 25, and so far we're seeing that in 26. And largely where we're getting now is this AI trade just continues to go and push markets higher and higher. And I think that's the single biggest theme that we're seeing out of markets is AI Now it's anything that's adjacent to AI, relating to AI. If you're feeding into the infrastructure, the power grid, all the energy, the commodities, anything that's involved in AI just keeps going on and on. But at the same time, we have geopolitical risk. We have the war. We've got the Trump situation. We've got social media tweets that are coming out of anywhere. We've got new Fed chairman come in. We've got interest rates potentially because of all these energy risks and inflationary risks. Interest rates now seem to be, at least for the foreseeable future, on pause. So there's a lot of weird dynamics, and it feels a little bit like the market is in kind of a bit of a gray zone overall, even though it continues to push higher and go up here.
So you talked about how AI has been the single biggest driver of all this, but is it the only driver, or are there other areas of the market that are actually helping push this market higher?
No, I mean, there's other areas, but I mean, I think the big ones, when you look at where leadership is coming from, it's anything that's tied in. Like if your positions can make a case that they're somehow feeding into that AI theme, that seems to be the single biggest thing, especially in the US. Certainly the semiconductor names have done incredibly well. But even if you look at the news today, we're just open up with, Dell, which no one has even heard the name Dell in 20 years. It's at its single biggest day because AI servers are starting to go. So, I mean, anything related to AI, like Caterpillar's one we've had that's done incredibly well, but that also feeds into the whole infrastructure, the building. So a lot of hard assets, infrastructure assets, anything tied to that is getting an incredible lift. So that seems to be the single biggest theme. At the same time, that would be more sort of the U.S. market, S&P 500, NASDAQ, Dow, everything related in there. When you kind of pull that back and look at Canada, though, the Canadian market is much more about commodities, natural resources, financials. So it tends to be financials, materials, energy, and those spaces. I mean, Canadian financials, we've got our fair share of exposure there. They've done incredibly well, are helping boost the TSX. Energy, which was a laggard in 2025, now in 2026, because of all this conflict, is a major leader, major area of strength. We've got some exposure there. We're not heavy on energy. I think that's probably a little bit overdone and overextended, but oil and gas stocks have done incredibly well, but they have pulled back. There's definitely some opportunity there if you're finding the right names overall. And then, of course, the materials, gold, precious metals, all those names, but also all the base metals, everything that would fall into that mining stock category. Base metals have been doing incredibly well, largely because those feed in again to that whole AI story and AI theme. The gold trade has cooled, but I mean, we still like that from a longer term perspective for a whole host of reasons. But if you look at gold, even this year, it still looks pretty good. It just was running so hot earlier in the year, January and February, before the interest rate and the Fed story and the new Fed chairman came in. So that's a big driver of Canada. So think of Canada as certainly your commodities, natural resources, energy, material, also the financials. And Canada tends to be a lot more old-fashioned value type businesses, dividend types of names, just less about growth, less speculation in the Canadian market, more about dividends, value. But there's kind of two markets going on, and we're trying to straddle both of those to a degree. We want to have that growth in the AI trade and all the technology and semiconductors at the same time. We want to manage the risk and get some of the more conservative positions and names in the portfolio.
Is that Will, just to that point quickly, is that what makes this market a little bit more interesting than other markets? Is that you have tech or you have growth and value kind of going at the same time, where historically it's kind of been one or the other, but here we kind of have both of them moving together.
Yeah, and they're kind of feeding into each other, which makes it interesting, and not entirely, but a lot of these more traditional names are being fed by this AI theme, as opposed to them moving in opposite directions. At other times, we've seen them really move in opposite directions. Even going back to COVID, coming out of COVID, it was all the growth, the technology names that really led the charge, and anything that was kind of more value, more conservative, more old-fashioned lagged. And then 2022 was the opposite, that all that technology, all the excess of COVID, all that steam came out of the market in 2022. Anything that was sensitive to interest rates, you had that growth scare, interest rate inflation scare, but then all your value names, all your dividend, all your more conservative defensive type positions picked up. In this market, it seems like just about everything's going, but you're also seeing signs that there's specific names that are not fed by this AI theme, or let's just say AI is starting to take them out. Like we've seen that happen to names like Constellation Software and Thomson Reuters. If you're not seen as being an AI winner and potentially your business is at risk from AI, it's not going to be good for you in the markets.
Yeah, we've seen that with a lot of the software stocks, Adobe, Salesforce, Constellation, to your point. So, Will, you've kind of just described that the market is still very constructive. And we've talked about on different podcasts how it is probably a little bit more mature. We are probably getting into the later innings of this kind of bull run, this cycle. But given all that, how should investors think about it? How should investors be positioned? How are we thinking about that?
Well, I mean, just a couple things is just because we're in the later innings of this doesn't mean that it's over. It doesn't mean that the markets are going to crash or come crumbling down tomorrow. And I don't think you necessarily want to be overly conservative or sitting all in cash or 100% of the markets, because this could go on for years, even that things keep pushing up and pushing higher. I think you just do want to be careful and cautious. You're not coming in investing and going, oh man, everything is washed out, everything's cheap, risk is being rewarded basically across the board. That's not the case at all. Things are mature. A lot of names and positions have had incredible runs already, and so you want to be selective about areas and pockets of the market that you're in. And I think you want to have a balance to that overall, which is what we're trying to do in the portfolio. We're not too heavily in that AI theme or technology or any of those areas. I mean, we have our fair share of positioning, but we're certainly well balanced across the different areas. So I don't think it means don't be invested. At the same time, because markets are doing well, like we're trying to maintain a bit more of a neutral stance on this. As markets are great and they're going up, but they've been doing that for a long time, and eventually this thing will come to an end. And so we want to have the right positioning, the appropriate allocation, the right strategy, so that we've got an all-terrain type of portfolio for you that is really going to navigate through markets and everything that's going on in the world, regardless of what's happening out there.
So is balance really the key to all this, especially looking at it as it relates to AI? Because we've talked about how this cycle could continue on for quite some time, but in the short term, it could be a little bit overextended. So is that why you want to have a little bit of a balanced approach when thinking about different sectors?
Yeah, and I think balance is probably a little bit of it's kind of one of those buzzwords that might be overused a little bit, and it just happens in the investment industry. But I mean, I think probably more what it's about for us is just positioning where we want to be in those right sectors, those right areas, the right names, right parts of the market, because having a balanced portfolio, just the traditional 60-40 doesn't always work or serve you that well. And we've seen that in lots of market events. Probably the more recent one that comes to mind is 2022, as you had that growth scare, interest rate, inflation scare, and bonds wound up doing worse than equities in that sort of market environment. So we want your portfolio to meet your risk profile and an investor profile. But I think rather than just sort of cookie cutter balance, it's more about positioning in terms of what pockets, what sectors, what areas of the market are you in. That's one of the reasons we've had more gold, more precious metals, and I think cash, fixed income, those assets play a role. But I don't think it's as simple as saying, all right, let's just have a 60-40 portfolio and call it quits. I think that that's sort of the starting point where you figure out, are you a 100% equity investor? Are you an 80-20? Are you a 60-40? Are you 50-50? Or figure out the asset mix, and then we manage around that and manage accordingly. But I don't think it's quite that simple. It's for us more about positioning. We want to have that all-terrain portfolio. We also want to be tactical around the edges of all that to manage the risk and take advantage of opportunity for you.
Yeah, that's key. I mean, a static approach, that's a good point. You brought that up in 2022. Just a traditional balanced portfolio wasn't helping you at all. So, one question here, Will, we've talked about how the markets have been so strong, they've been so robust, they're moving in the right direction. It seems like nothing can kind of throw them off. What are some risks or some things investors should be kind of thinking about as we move to the back half of this year?
Yeah, I think there's a few. I mean, this whole AI trade, as that gets more and more mature and more speculation and craziness comes in, I think there's always the risk that the whole AI theme starts to unwind because you are starting to see that anything if a stock can just somehow say that it's related to AI or is touching it, it's flying up massively. So I think the longer that goes on, the more excess, the more speculation, the more risk that starts to unwind. I think the other one is that you've got inflation concerns, you've got interest rate concerns. The story coming into the year is that we're likely going to see interest rate cuts coming to stimulate the economy. That after the war, oil prices, inflation, all of that. That's a real risk out there. So I think you could see a scenario that if inflation keeps creeping up, oil prices stay high, that ripples through the economy. Next thing you know, we're seeing high inflation numbers that would really cause these more growth speculative names to pull back, like we saw in 2022. Interest rates start to go up. If we get into a cycle of actually interest rates going up, I think that turns this whole market over. And then the third big one I'd think of is just if somehow recession, real slowdown happens, especially in the US. And that, especially if that's combined with inflation, higher rates, those sorts of things. If economic data starts to come in and it's worse and worse, and you're combining that with an inflationary type of environment, I think that's something that could turn this market over. Probably the fourth big one I think of is any kind of just black swan. I mean, that's probably realistically, if this market goes and turns over, it's going to be something that no one was thinking of. I mean, you could use your imagination and think of different things that might happen in this world, in this market environment, but it could be something politically or geopolitically or something to do with AI or cybersecurity or who knows. Think of COVID. It's not like everyone was sitting there in January of 2020 and saying, "Oh, I think there's a big risk here is a virus coming over and taking over the whole world." That wasn't happening. So, like that's why we manage the portfolio the way we do is because yes, there's known risks and known things that can take over this market, but there's also unknowns, and we want to have that all-terrain type of strategy, have the right positioning, have the right tactical strategy for managing through that and navigating through that so that you know that you've got the portfolio that regardless of what happens out there, you're going to be okay. You're going to be taken care of. So that's what we're all about. That's what Aretec Wealth is all about. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth, and we'll be back with everybody next week.
Have a good one.